right, welcome. Okay, right now we are at chapter 4, producer behavior. And we saw that companies, they have costs, they have revenue, and we found a way to, well, display these numbers using graphs, right? Now, if we go to page, I think around 80, here, we have the case about Dumbledore and his magic wand, right? Exercise 4, it's page, let me check, 88, and let's analyze it first. So, the production of his company, or in his company rather, increases with 10 units for every employee he hires. So, every new man or woman he hires will produce or will lead to an increase in production of 10 units, right? The FC or fixed costs are 40,000 euros, and every employee will cost him 50,000 euros. Okay. The wands are sold at 6,000 euros a piece, and yeah, they're very expensive, of course, because they're special. And the question over here sounds as follows: just open the sheet with exercise 4 and determine the optimal output for the Dumbledore's company. Right. Um, in order to be able to like answer this question, we need to graph the information we are given. So if we open the Excel file, we see this sheet over here, exercise 4, of course, that's this one. As you can see, everything is still empty, and it's up to us to make sure everything is filled in right. We have to fill in the gaps right now. I will do it like this so we can still actually see the questions. Let's see. I have to find my. Here it is. So, obviously, we will start with this table over here before we go over to this one. So right now, we will start with labor. So labor is about employees, and we always start with 0, and then we will see what the effect will be of 0 employees in your company. 0 employees will obviously lead to 0 production. We see that every employee he hires will come with a cost, but it will also come with an increase in production. So if he hires one man or woman, doesn't matter, he or she will produce 10 units. Okay, and we can actually fill in the table just like that up until 9, and we can do the same for production. Well, we can actually make sure. Oh, we can do it like that. Yeah, I ruined my layout, but we're just going to ignore that. And now we already have 2 columns fixed. That's good. Okay, now TFC stands for total fixed costs, and this revolves around rent you pay for buildings, perhaps for machines like depreciations. Um, but in our question over here, we only know something about, let me get the marker out. The fixed costs are 40,000 euros. You already know the fixed costs. This is the only number about fixed costs that you know. So that's why this will be 40 all the time. So the thing is, all these numbers, oh, that's not the thing that I want. Of course, this is equal to that. And then I can do it like that. All right. This is still quite easy, I think. Um, I'm writing 40 over here instead of 40k. You can write down 40k, that's no problem. But this is just much easier to type. I will do the same thing for the next thing over here, because here we see that every employee will cost them 50,000 euros. An employee is a variable cost, so this will be here, like total variable cost. If I have 0 employees labor, right, then I will have 0 costs over here. But as soon as I add 1 employee, I will get a cost over here of 50,000, right? Well, I just said that I'm going to write 50 instead of 50,000, so let's just do that. Okay, and then I'll have 100 because another one means, yeah, another 50,000, of course. And then I should be able to drag this all the way down, oh, until there. And then I can see all my variable costs as well. Now, this over here, TC, stands for total costs, which is the sum of the fixed and the variable one. So I just have to 40 plus 0, enter, and I can just drag this all the way down, and Excel will calculate everything just like that. So it can all happen very fast, as you can see. Total revenue. Well, this is about, of course, the money we will earn, or Dumbledore in this case, will earn. And we know that the wands are sold at 6,000 euros per piece, right? But of course, if we produce nothing here at the beginning, we will earn nothing, of course. That's pretty normal, I think, or obvious. So here we have a production of 10 units, okay? And apparently every piece is worth 6,000. So this means that my 6,000 will be multiplied with 10, which gives me 60,000. So I will write down 60, right? Not 6,000 because we're doing everything like this. We're doing this. Well, this is easier. It's easier to write 60 over here instead of 60,000. It's much faster that way. And now, well, yeah, okay, obviously I'm going from 10 to 20 over here. So this will also double. And then I have this. Oh, and I can just drag this down once again. And I am over here already. Okay, doing good. So far, so good. Almost completed the first table already. TP stands for total profit. And well, we can calculate profit by looking at our revenues and our costs. So this will be equal to the amount we earn minus the amount we have to spend. And yeah, well, in the beginning we have minus 40 profit, which is a loss, which is not good, but we're not producing anything over here. We still have fixed costs to pay. That's why we have a loss over here. So once again, I will drag down this cell, and here we have it. First table complete. Before I draw my conclusions regarding the table, I will go on to the next one. But we already can see that the more we produce, the more profit we'll have. Oh, I'm doing okay. So that's already something very special or a good thing to know. Um, Now we get to the tricky part, I call it. The tricky part is about, in this case, production, marginal cost, marginal revenue. The problem over here resides with this column I. This column is different from this one, right? Because we know that marginal costs and marginal revenue, well, they're about the change when we increase something or change in production. It's not really about the numbers we see over here. It's about what happens when we go from one level of production to the next. A way to explain this actually is by looking at the textbook, which I'll try to find it as quickly as possible. Over here, we see that we write marginal revenue and marginal costs always between the lines and not on the same line as zero production for here, like here. So here's nothing. It's over here. It's between the 0 and the 5. And right now, we have a situation where we're between the 0 and 10, right? So the most obvious thing we can write down over here is 5, because that's actually the middle number, or the thing between 0 and 10. A way to find this is by actually um, well, adding 10 with 0 and dividing it by 2. Now we get 5 as well. And, well, for the next one, we'll need the number between 10 and 20, which is 15. We will quickly see that this will always be plus 10. and eventually we will reach 85, sorry, 85. So that's how we will deal with the production column. Just remember when you see MC or MR, this is always about change in production. We're working between the lines, so we'll have to use these numbers instead of these ones. Okay? Whew, all right. That was the hard part, I think. Now we're going to a more easier part. Marginal costs. Marginal costs. You have to know what it is. Once again, I can guide you towards the textbook where we have the formula. Here we have marginal costs already. So let's see. Marginal costs is over here. Change in total costs divided by the units we're producing. Okay, that's the first one. And the second one, marginal revenue. I'll keep scrolling until I find it. I hope I'm not missing it. This is marginal production. This is not the one we want. But the thing is, if MC deals with costs, MR is going to deal with revenue. So uh, this thing over here will be TR instead of TC. So, but for now, I will take it with me with my cutting tool over here, like that. Take it with me, and then we do it like this. Oh, that didn't work out. This should work. Yep, there we have it. I can also write it down over here, so we know that R. Yeah, this is not really that pretty, but who cares? Change in total revenue. Okay, wow. And here we have change in the units. Oh, yeah, produced. Can I actually? I'm trying to delete it like that, so we have a. Yeah, that's perfect. Okay, that looks very good. Yeah. Now, marginal costs. So first thing here, we see marginal costs, change in total costs divided by change in production. Right? Now, let's see. This means that my first number over here, I have to open my brackets. I will do double. You will see why in a minute, or I can like 50 seconds or something like that. I don't know. So change in TC. What's TC? Well, here I have my 90 minus 40. This is how I will be able to see the change. I will close the first bracket. I will divide, open a new bracket, and then I will look for my change in production. So this is about the 10 minus 0, right? Double brackets to close, and then we press enter, and we will get 5 over here. Now, very important. Do not think that the change in units produced, it has something to do with this column over here. No, 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 no. This column over here will only be used for a graph, for the graph with the marginal costs and revenue. So please do not use it for the calculation of MC and MR. All right. Now, once you've entered your formula, so here you can see it with the beautiful colors as well, I can actually drag it down all the way to here, and then we see, oh wow, it's always 5. This is not a mistake. This is the case for this, well, let's say assignment over here. So now I can do my MR, which is almost the same. So equals, now I have to look at the change in total revenue, which is over here. So 60 minus 0. Closer, I actually have one bracket to spare. I'm doing some illegal stuff right now, but I hope it will work out in the end. Divided by, once again, change in production, and I forgot my bracket. So like that. And then we do minus, then we go to the 0 over here, we close them off like that. We get 6. That is correct, by the way, because I know the answers by heart. And there we have it. When we drag it down, we get 6. Now, In all honesty, this case is not really that realistic. You'll see why in like a couple of minutes, but this tells you something already. When MC and MR are always the same, this means we're dealing with a case of a proportional marginal production. That means that when we add more labor, our production will keep increasing with the same rate. As in, what do I mean with this? We know that every employee we hired will, let's say, generate an equal amount of 10 units. Like every time we add someone, we get 10 more units of production, right? So this is not really that realistic, in all honesty, because not everyone works as good or as fast as someone else, right? And but this is just like a case, right? Right now we have to draw the graphs and then we're done. So that's it. That's actually it. We still have to answer the question, of course, which was, in case you've forgotten, I have to find the page 88 again, and it's over here. The question was still, determine the optimal output for the Mueller's company. Optimal output, and as we can see, optimal output is there where we have the most amount of profit, and this is clearly over here, which means that the amount of production, well, will be 90. Okay, 90 units, or 90 wands. So that's important to know. Now, we're going to draw these graphs, right? So I will use my full screen right now. I will press insert. I will go to chart. As always, we will look for the XY scatter plot. Your version of LibreOffice might be in Dutch, so please be mindful that you have to take this one and not just line. This is a better one. And you go with points and lines, and we go for smooth, just in case. And then we can actually select our data series over here. Now, I will press finish for now because as you can see, my graph is covering my numbers. You have to come over here. Okay, there we have it. Now I can change my information over here. First things first, I want a TFC, a TVC, TC, TR, TP, MC, and MR curve. I want all of them. Now I can decide how I will actually do this right now. I prefer taking TFC, TVC, TC together, and perhaps MC and MR on the same graph, but I think I will just do them separately. And I also want to do TR and TP separately because, well, you'll see why. It has a certain purpose. So I will try to make three different diagrams right now, okay? So add, add, add. This one will be called TFC. The X values are always, or is always here. It's my production. So I will select all of them. And then my Y will be over here. That's the first one. Second one is T. No, I just did that. So that's TVC. X values are still the production over here. Y values are still are these ones. No, I'm actually doing very bad right now. It should be this one. There we have it. Okay. Then we have the last one, TC. My total costs. Well, I'm hesitating right now whether or not I will put them in the same graph as this thing over here. I think I will just put them together. Well, why not? So this will be total costs, X values, production, Y values, these ones over here. You can actually see already how things are going. Pretty good, as you can see. And I'll just leave it with that over here. That's my first graph. Now, I don't like it when the legend is just hovering over here in the middle. So I will do it at the bottom. Looks way better, in my opinion. This is one thing we can do. Now I can add another one, chart. Now we go to XY, up, smooth, finish. I'll drag it down once again. Um, Data ranges, add, add. The first one is my total revenue. Once again, production and Y values, these ones over here. Name, TP. As you can see, if you're used to this, it goes really, really fast. So just try to practice this, and then we can actually see this thing over here. All right, good. All right, let's see if everything is correct. I will press OK. There we have it. Total revenue, total profit. Yeah, as we can see, this is not really that great. Perhaps TR is way better on this graph over here, or TR and TC separately. So I might actually change things up a bit, because this thing is not really that nice to view, I think. But that's no problem, because we can change this, of course. Okay, so TP, I only want you in there, so I will remove this one. Then I get this. This is way better, in my opinion. You'll see why um, any second now. This has to go data ranges again, like that. Total cost, I'm going to destroy you too. I'm sorry, just like that. And I will make a separate graph for you too, so I can make four actually. Why not? Um, this one over here, like that, like that. Finish. Third time over there. Let's come on. Come on, man. Come here. Okay. Data ranges. Add, add. As I mentioned before, I want TC. Oh wait, something is amiss. Why? Why can't I? I think I selected the wrong graph right now. Yeah, XY Scatterplot. That's better. There we have it. So name, total cost, X values, production, Y values, these ones. And then we can actually finish things off by selecting TR over here, X values over here, and then Y values. I hope this video didn't get too confusing. That would be bad. I'll tell you what happened right now. So um, let's put this one over here, this one over here, and this one over here. We still have to make a fourth one, but I just want to say something right now. So TFC and TVC, I put them together because these are the costs, and when I add these two together, I will get my total cost in the end, right? But it's very interesting to take TC together with TR. So now we can actually see from which point we're making profits. So as long as the blue line, which represents my costs, is above the red one, I will make a loss, right? But as soon as I pause this point, you see that the red line will be the highest one. This means that I'm making a profit over here. So around 40 units produced, I will actually break even, right? And then I will start making profit. We can also see it here on the total profit line. At the beginning, we have our minus 40 because we're not producing anything, right? Then as soon as we produce more than 40 units, we will start making profit. And we see profits keep increasing if we increase production. So this company over here, Dumbledore's company, should really produce as much as it can, right? Very important. Now, loss graph using this information over here. So I will insert my chart. I will once again go for the same XY scatter plot, finish. Data ranges, I will have two of them. The first one being MC. X values. Now I will use these numbers. Okay. And then the Y values are these ones. Then to finish things off, MR over here. X values, padam, over there. Y values over here. And then I can press OK, and we're done. Now, as we can see, because MR is always the same, MC is always the same too. And the red one is always above the blue one because, yeah, 6 is higher than 5. This means that every unit we will produce extra will always yield more return than it will cost us money. This is why it's a very good thing to keep producing as much as you can. All right, there is of course a limit to this because we're still watching this here on the short term. Capital is still fixed. We can't really expand on the short term, so we'll have to do with the buildings and machines we have right now. Okay, so we will have a limit, right? We will have a limit. The golden rule is just produce as much as you can, right? As you can. Okay, that's exercise 4. Let's check the time. I've been talking for about, I can't really see it. Where is it? Almost 30 minutes. I'm sorry. Terribly sorry. I do want to say one more thing about exercise 3, by the way, too. Um, there we saw something like average costs. Well, if you want to graph something like average costs, you will always use the standard formation of production, right? Only for MC, marginal costs, or marginal revenue, you will be using the second table of production, like the special one, like this one right here. Only for this graph, you will use this right here, right? Okay, so never combine MC and MR with your regular production levels. Don't do that because things will go wrong. All right, I hope this video cleared things up. I think, yeah, there was a bit of chaos like at the middle of the video. Sorry for that. But if you have questions regarding this video, please let me know and I'll help you as soon as I can. Okay, good luck. Keep practicing. And yeah, that's it. Bye.